Good morning and welcome to today's 5 with Fitz. Tech stocks are headed lower this morning as I type or as I speak, which of course means that the S&P 500 is also headed in that direction. So stay focused. We're between earnings reports, so it's entirely normal for A, the markets to be listless, and B, for them to lurch from headline to headline. So do 3 things. Get your buy list ready, trim your dead weight, and prepare for your next move. Remember, investing is never a game of rush decisions. So here's my playbook today. Number 1, where should investors put their money next? The super smart Liz Clayman invited me back yesterday to her show, Clayman Countdown, to talk money markets and more. How do I balance what's happening and where should investors put their money next? You can take a look at that clip, which is available on my channel. Hopefully you'll enjoy it and find it valuable. Number 2, Musk sees this coming, but can anyone catch BYD? BYD, the Chinese automaker, just crossed a major milestone, over $100 billion with a B dollars in annual revenue for the first time ever, up 29% year over year. Now, that's thanks largely to, get this, a surge in hybrid sales. Now, that officially puts it ahead of Tesla's $97.7 billion. Is this predictable? Absolutely. BYD isn't just riding the EV wave, they're engineering it. Now, OBAers, of course, have been ahead of this one for a while now, and hopefully you have too, because we've talked about it a lot. The stock has returned 104.72% since I brought it to their attention versus the SPY, which is a popular S&P 500 ETF that's tacked on 12.17% over the same time frame. Here's the thing I want you to think about today. Hybrids aren't just a stepping stone anymore like they once were, but rather BYD's Trojan horse into markets that are still figuring out their charging infrastructure. I think it's a super smart move. Now, sadly, and on a related note, Japanese automakers that once commanded a sizable lead in hybrid technology, especially Toyota, are now at the back of the pack. They're hardly even worth a look, in my humble opinion. Now, Keith's investing tip when it comes to this kind of stuff is simple. When the spotlight gets too hot, the smartest players counterintuitively often step into the shadows and then steal the scene. Too many investors pick sides when what they should be doing is picking winners. Speaking of which, BYD isn't the only big hybrid mover out there, and if you'd like help figuring that out, you might enjoy One Bar Ahead or the 5 with Fitz heck. Anyway, number 3, too little, too late, U.S. blacklists over 50 Chinese companies. Now, the United States has just blacklisted 80 organizations in an attempt to slow down China's AI desires in advanced computing. All are allegedly involved in developing AI, supercomputing, AI chips for military use, presumably against anybody else or everybody else, as the case may be. Quantum computing is a particular focus because it would render encryption moot, or at least that's what the scientists I've spoken with say. Not for nothing, but quantum computing would also dramatically accelerate global data-driven intelligence gathering and render encryption moot. Now, Julian Kelly, Google Quantum's AI director of hardware, believes quantum computers will have practical applications within 5 years. Think about that, within 5 years. Now, this will be an unpopular viewpoint on this particular topic, but my take is, this is a great idea, but it's too little too late. The horses left the barn a long time ago, so shutting the door now doesn't make much sense. The time, not for nothing, to make this move would have been more than a decade ago. Now, the last estimates I saw suggest there are more than 4,000 front companies for bad actors already operating within our borders. So it seems to me that if the U.S. and other countries are serious about cutting off China's access, which is what the media is picking up on, the real focus should be cutting off think tanks and academic research funding for some of the world's most advanced computational projects, many of which are, irony of ironies, funded either directly by the Chinese or involve Chinese scientists who are repeatedly caught with their hands in the intellectual cookie jar, but somehow never seemingly get brought to justice. Anyway, you and I both know that's not going to happen. Academia needs global talent, and rightly so, but nobody's giving up cushy research budgets without a fight, no matter where they originate. So what do you do as an investor? Well, I think the answer is very simple. You continue to buy stock in companies that are moving the bar higher, like, I don't know, NVIDIA, little company you might have heard of. Anyway, Keith's investing tip on this one is that there is very little you can do about the constant friction between nation states, but there is a lot you can do when it comes to picking your investment choices. So focus on that. Chips don't lie. Politicians and spies, different story. Let's talk GameStop for a minute. Number 4, be bullish on crypto, not dying business models. GameStop stock, this is a mouthful. GameStop stock has popped this morning, not because it's selling more games, fixing a business model, or suddenly found profitability down the back of the couch. Nope. It's rallying because it's adding Bitcoin to the balance sheet. Because, when your core business is fading faster than a TikTok trend, why not hitch your wagon to the nearest shiny object and hope nobody notices that you're still selling dusty Funko Pops in half-empty malls? This isn't strategy, nor is it innovation, folks. It's desperation with a crypto filter. So here's the thing. If you want to be bullish on crypto, and there's a good argument you should, then be bullish on crypto, not dying business models. Here's a trade idea too. So short GME into strength, or consider puts. Put skis 3 to 6 months out, a bet that the stock goes down. Pair that with a long Bitcoin via a high quality name like Monster, or spot ETFs like IBIT or FBTC, just to pick two at random for smarter asymmetry play. And finally, number 5, unlocking wealth and wisdom in your portfolio will thank you. I spend much of my time talking about money, how to make it, how to grow it, and most importantly, how to keep it. The tips, tactics, strategies I share have helped investors and traders go from zero to millions, perhaps even billions of dollars over the years, and that's an honor I don't take lightly. But every once in a while, I get the rare chance to step outside the numbers and to talk about something even more powerful. Why I think the way I do, and why I'm thankful that I get to think the way I do. And recently, I had the privilege of sitting down with Yogi Patel to explore something most folks overlook: how gratitude shapes wealth, unlocks it really. Now, if you've been reading my work or following along for any length of time whatsoever, you know it's not just about the money with me. Success is about the mindset. So I hope our conversation helps you unlock a deeper connection with your goals, your finances, and your future. Because at the end of the day, money is a tool, but wisdom is a superpower. So enjoy, and of course, thanks for watching the interview. I hope you have it fun. Today's bottom line, the numbers are simply staggering. Study after study after study shows that most investors buy when they should be selling and sell when they should be buying, as much as 85% of the time, according to one study I saw years ago from Barron's, if my memory serves. So why is that? Very simple. Because they let their emotions, primarily fear and greed, get the better of them. So, short story, keep your emotions out of the equation. As always, let's make it a great day. You got this, I promise, and I'll see you tomorrow. Thanks for watching.